Statement of financial position is a list of all the assets owned and the liabilities owed by a business as at a particular date. It is a snapshot of the financial position of the business. Okay, if somebody asks us that why we prepare balance sheet, what is the purpose of preparing balance sheet? So your answer should be very straightforward. That we prepare balance sheet or statement of financial position that it shows the financial position of a company as a particular date. Like right now, how much is the total assets of Apple company? How much is the total liabilities? How much is the total equity? So it shows by the help of balance sheet. So in that balance sheet, we have three things. We have assets. It has three elements of accounting: assets, which assets include current and non-current assets. Number two, which has liabilities, current liabilities and non-current liabilities. And the third one is capital. So these three elements of accounting exist in balance sheet. Yes.
So I have a question.
Yes.
It may sound kind of weird, but I just thought about it. Okay, when you talk about financial position, at least students or people who have been in accounting class like right now will be able to understand. So assuming the owner of the company is an illiterate and has hired me as an accountant or anybody else, and when you say like, okay, like you want to explain to that person what the statement of financial position is, may not really even understand, but probably in a layman's language or simple language to make that person understand is your worth, how much you have, as in your net, your worth you have. Are you like indebted, or are you becoming bankrupt? Like your business is gonna close in anytime soon, or your business is healthy, like you're doing fine. You understand? Like your assets probably are more, your net asset is like a lot. Yeah, I just thought about it, how you can explain to in simple terms to somebody who has never been to a accounts class.
Yes, whatever you said is just great words you mentioned. Like I have mentioned here, it simply is a snapshot of the financial position. When it comes to financial position of the business, it means like we show the summary of these three elements of accounting in a summarized way. Like we can know that how much this company has assets, how much do they have non-current assets, okay, how much liability does this company has, whether this business is financed more by capital or more by liabilities. The lesser the liabilities, the stronger the company is. The more liabilities, the less stronger, the less dependent, like it depends on somebody else's monies. Okay, so by having more capital, so it means this company is financed more by owners. And that's why whenever we want to take a loan from the bank, they will see our balance sheet. Based on the balance sheet, they will give us a loan. That if we already have a loan from other banks, which we will mention in non-current, they will not give us a loan easily. If we don't have a loan, our liability is too much low compared to capital, everybody would give us a loan. Why? Because we are a stronger company, we have more assets, we have more capital, less liabilities. That's what we can show in the balance sheet. Like here, under the current assets, we can show total cash, how much total cash we have, how much total accounts payable do we have, how much total overdraft do we have. Like here, we showed as a total everything, total assets, total billing, total line, total cash, total accounts payable, total mortgage payable, total car loan. That's what we can show it in balance sheet. Okay, number 2, statement of profit or loss, or which has another name by the name of income statement. Okay, so statement of profit or loss, or you can also call income statement. What now? Let's see here. What does it shows? Actually, in simple words, statement of profit or loss or income statement shows the financial performance. What does it mean, performance, financial performance? How good our company was in the last year. Whether we make more profit, whether we make more income compared to expenses, how much expenses we did, which expenses we did. At the end, whether we make a profit or whether we make a loss. Okay, so it shows us that statement in the whole for the whole year. A statement of profit or loss is a record of revenue generated and expenditure incurred over a given period. The statement shows whether the business has more revenue than expenditure or vice versa. So here we have two elements of accounting: income, which is revenue, and expenses. And at the end, after deducting the revenue minus the expenses, at the end, we may have profit or we may have loss. Did you get this one? Okay, the third statement. Statement of changes in equity. Statement of changes in equity. This statement is purely covers equity part. Like how whenever suppose we have a company and we want to bring another partner. If the another partner wants to join, so he will bring more money. If he brings money, our equity increase, which we will mention here. If there is 5 partner, one partner is going from the company, he is leaving, so we will give back his contribution. So once he take his contribution, so definitely our equity will decrease. If we want to share the profits at the end of the year, sharing the profits will decrease our equity. If we make a loss every year, that loss will decrease our equity. If we make a profit, the profit will increase our equity. So all those things which relate specifically to the equity part, increase or decrease equity, we will mention as also in statement of changes in equity. This is in more detail compared to balance sheet. In balance sheet, we also have capital here, but we will not do in much detail here. Here we will do the summary of total capital, that's it. And here we want to mention the balance at the beginning and the balance at the end. How much increase or decrease in the whole year we will mention here. Okay, like this is just a sample of how it looks like, which we will study at the end of the class. So this is statement of changes equity. I hope you get. If not, tell me and ask me about this. Okay, last one. Notes to the accounts or notes to the financial statements. Let me do this, notes to the financial statements. Notes to the financial statements, it means like whenever we prepare a statement of financial position, statement of profit or loss, statement of changes in equity, we should also have notes to the financial statement. Notes to the financial statement, basically, like we give explanation to the accounts. Like before it was notes to the accounts. Let me write that one as well. Notes to accounts. In brackets, let me write financial statements. Okay, notes to the accounts, basically, notes to the account or financial statement basically means, like, let's suppose here we have equity increased. Equity increased because of a person joined the company, another partner joined the company. So if we want to give explanation to, let's suppose, to this part, dividend, or the partner joined the company and he brought the money, we want to give a little bit explanation how that person joined, when he joined, how it affected. So we want to give explanation to that part. So in that part, we should give explanation here, notes to the accounts, which we will mention a brief or in summary way about that account, some explanation that this person joined the company and because of this, our capital increased by this much and he invested, let's suppose 20%. So that's what we want to give notes. So we want to give some disclosures to the accounts and we can do it in notes to the accounts or